Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 p.m. here, and thanks to daylight savings, we are now level with UTC, making it 1 p.m. there as well. So can everyone just do me a favor and let me know that visuals and audio are coming through okay? Also, a big shout out to everybody that's joining the stream live today and everybody that's going to obviously be watching this on recording as well. So hopefully everything is good. Yep. Cool. Right, guys. So Aromatic Genetics, there he is. Good afternoon, bud. Thank you very much for the update. And as always, love that name. Omid as well. Thank you very much, guys. Much, much appreciated. And my good friend, Lord Tang. We really do have a full house today, guys. Loads and loads of viewers, which is awesome. So we're going to keep this a little bit more condensed today. Obviously, we've got FOMC coming up later today. So always a very, very dangerous kind of time to trade. As we see on key news events recently, we've been getting crazy whipsaw, these big Darth Maul candles, taking out the highs, taking out the lows, and just leaving everyone in a bit of a mess. So today's a no trade zone for me. I'm very, very interested to see what happens after FOMC, of course. But I thought we would just keep this like a little bit simpler, really. I'm going to just run through quickly what my thoughts are on Bitcoin. We're going to take a look at ETH as well. A lot of people kind of asking about ETH. And then if you guys have got any chart requests and bits and pieces you want me to take a look at, we'll make time for some of those at the end as well. So rather than kind of starting with the top down that we would normally do, I just wanted to kind of plug you guys into my thinking of the current state of the market and what I think we're going to do. So what I've got down here is I've got some higher time frame levels or order blocks, as we can see here, which are labeled up with the hour that the order block is taken from. We've got our buy side liquidity up here, our sell side liquidity down here. We've got our equal lows over here, which I do get a lot of questions on. So just to clarify for the start, anyone who's not aware, most of my training was undertaken under ICT as well as Trader SZ. Who both were huge influences in my life. I don't completely and utterly abide by the ICT principles because I've seen many successful traders using lots of things, moving averages, bits and pieces. So I love to study the market and learn about different techniques. And while I'm a big fan and firm believer in ICT's concepts, I do believe there's others outside of it as well that can make successful traders. So I try and kind of give my opinion using different methods, but in terms of how I trade, this is how I trade the market. So I thought it might be of interest to kind of give you guys a little bit of insight into that. So what am I looking for at the moment? So this large grey box up here was a fair value gap on a higher time frame. Price has looked to move up into this to rebalance it. All right. And then we've got this slightly below it as well. Right. So if I just quickly ping you onto the daily. Get rid of this. And then what we can see here is our larger kind of range. All right. This is what's capping the downside. All right. We can see as we've come into here, why is this level of interest? We can see that we've got support here. We've got support here. We had this deviation here, came in and retested, and then we sold up. We come back into this area again to take liquidity. And again, we've had that bullish reaction. So the opposite is true of the highs. This, for me, is the point of interest. This provided really, really key resistance. We see these long upside wicks here showing the selling pressure that's above this level. And once again, when we deviate, we come back, we retest it here, and then we have this really, really big sell-off. Where to? To these lows, right? So for me, I like to think about price in terms of how it moves as a hunt for liquidity, right? So henceforth, why fair value gaps or inefficiencies, which we can see one here, and we've got another one here, all right? So this is just to give some context when we then kind of drop down onto the lower time frames. Now, obviously, we have high time frame targets, and then we want to decant down onto lower time frames in order to look at things like structure, but also as well so that we get the very best entries. But it's very, very important that we don't lose focus on that high time frame bias, okay? So what does that mean for where we are at the moment? Well, obviously, we're in a no trade zone today because of FOMC. We loaded up on some short plays with the Nest this week, which have played out really well. And the reason for that for me was because we've come up into this. Okay, so whenever we see an inefficiency in the market wants to rebalance that. Okay, so what do I mean by that? Well, if we look at this here, and I'll just give you a very, very quick run through of this so it gives good context. All right, so here to here, right, we have this inefficiency. So it's a 3-candle pattern that we're looking for, and we're looking for a gap between the first candle's wick and the third candle's wick. All right, that's basically when we have such an impulsive move, such a powerful move, that it leaves this gap and the market doesn't get to balance. Now, how we look at that, as we see and we trace it forward, is then we look for it to rebalance, all right, to fill that void. And then what do we get here? In filling that void, we create another fair value gap, right? As we can see from here to here. So then what are we looking for? We're then projecting that forward and we're saying, okay, that's going to act as a draw, okay, as a magnet for price. So what we see is as we break down here, leave this inefficiency, price comes back to rebalance it over here, all right, before then selling off again. And as we look through the charts, we can see a number of these examples, all right? We've got this one here, then we've got this one here. So that's why this was of significance to me, right? So when we've got that high time frame context, what we notice is then when we're running these lows and we're starting to get this reaction, right, then what we're looking for here is what's drawing price back to it, right? It's obvious. Trying to sell below this level, and it just keeps getting bought up, right? That's what these long downside wicks are telling us, okay? And we need to remember as well, I need to remember, is that we don't want to discount candles and candle patterns, right? A lot of information is held in these candles, and they're always accurate, right? Because it's a pure, unfiltered truth of what the market is doing, okay? So even if we're looking at something really, really simple like engulfing candles, yeah? So just for an example, if we run through these quickly, bearish engulfing candle, sell-off continues, where to? To sell-side liquidity, all right? Bearish engulfing, bearish engulfing, bearish engulfing, bullish engulfing starts this corrective move higher, right? And then you notice once you've got that, then you've got another bullish engulfing candle here, here, all right? So we also get another one here, and we've got one here. Now, the significance of that is that it shows that the buyers are selling in, or if it's bearish, then it lets us know that it's looking to sell off, right? Sorin, hey buddy, how you doing? You good? Wishing you a good day as well, my friend. Let me share the very kind sentiment with everyone on here. Absolutely right back at you, Sorin. And just quickly, before I continue, quick question here from Lord Tang. Is no trade zone pretty standard at FOMC days? Yeah, I mean, it is for me. It is for me. I know it's similar for a lot of other traders as well, but I'm sure there's people out there that trade these days incredibly well. Obviously, they're news-driven events, the basic kind of sentiment around the whole kind of buy the rumor, sell the news. The problem is, especially in recent times, with the market the way that it is, it's very, very heavily affected by news events, announcements, right? So for me, it just makes sense to kind of sit on the sidelines for these. If we look back to previous days, we had this massive whipsaw. You're getting these big Darth Maul candles, right, that are coming out. They're taking out the highs, taking out the lows. And it, just for me, there's just a little bit too much danger. I want to wait for the dust to settle, see how that plays back into our bias. And we can see as well in the build up to this, we look at this week, right? Let me just zoom in a little bit here. We've got this Sunday coming into Monday. We're just completely encased by Monday's range. Yeah, so we're going to actually draw that in here as well. So what am I doing? I'm taking Monday. Okay, and then that's Monday's high and low. All right, and we're going to look at that on the lower time frames. All right, so just for overall context, that's just why I wanted to kind of give you this view on the daily, right? So we've got buy side liquidity up here. That's where we expect price to run to if it's going to continue its bullish momentum. We haven't filled this inefficiency yet, but again, it's not a silver bullet, guys, right? It doesn't mean that it has to completely fill it. It might come back and fill it in a day, a week, hours, months, right? But the premise is that when we see an exhaustion level or exhaustion point, basically when price is trying to drive lower, it's trying to drive below this low, we take out this liquidity, it gets bought up, yeah? Then price drives down to here, gets bought up again, drives down a little bit deeper to take out these stops and the liquidity resting under here, these relatively equal lows, gets bought up again. So when we're seeing stuff like that, we're saying, okay, well, we know that there's buyers stepping in, but we need realistic targets, yeah? So I'm always thinking, well, where's price gravitating? Like, where does it want to go, yeah? If we think of it like this analogy, one of my really rubbish British analogies that I love doing, which I'm going to do as I pour out my British tea, of course, just really living up to the stereotype. So back to my rubbish analogy, right, which is thinking about fuel, right? So if we think of price as a vehicle, right, and we think of liquidity as its fuel, yeah? So if our vehicle's here, yeah, and it knows that there's fuel here and there's fuel here, and this is the journey, this is where it's set off, right? So we get to here, right? Not enough fuel to continue the journey. So what do? We drop back, refuel up a little bit more, try and go further, right? Now, let's imagine this is our halfway point. Now, we know we've got enough fuel to get to here now, but we don't know how much fuel is there when we get there, right? Now, we've got ourselves enough fuel to get here, and we know we've got enough to get back, but we might not have enough to get to our ultimate destination. So if we don't, price is going to go searching for fuel, yeah? And that search for fuel exists below key levels, yeah? So order blocks, key swing highs, key swing lows, right? And we're using the fair value gap to say to ourselves, okay, that's where price is trying to get to, all right? So rubbish analogy over. Let's drop ourselves down onto the hourly and give this a little bit more context. So starting here, these are the lines that we just drew in, all right? So this is our Monday range, and let's just make these a different color, shall we, so that they stand out. So here's Monday's range. We've got Monday's high and we've got Monday's low. The other thing that we like to do with a range is put in an equilibrium. All right, which we'll just leave here for now. Now, when we look at this, right, and we can see our range low here. In fact, what I should really do is make them a little bit thicker so that you guys can see them clearly. Do let me know, guys, in the comments on that if there's anything a little bit amiss. I've seen a comment from Lord Tang here. I heard price is more like a ravenous shark. I think that is a very good saying. I do drop some ridiculous statements. I really do. So, sorry, just before I continue, I've got a few questions here. So I had to learn the hard way about FOMC and got chopped out. Yeah, I think most people, unfortunately, go through that. And Sorin as well, looking forward to the FOMC news. Patience is the key. Absolutely. Like, that's such a true statement. Trading, as traders, we're all desperate to take trades, right? But actually, that can be our undoing more often than not. Yeah, so waiting for price to come into one of our levels, a key point of interest, is more often than not, or is always, in my opinion, the right thing to do. Now, can get very difficult because the market starts to move away from you. You've got your bias in place. The market starts to run. You think, God, I knew it was going to go there. I thought it was going to go there. And that's when you FOMO in. Yeah. So the problem with that is that the markets are almost designed to do that to you. All right. So designed to make you think that they're going higher before they reverse, designed to make you think they're going lower before they reverse. And that's when we're going to look at this on the lower time frames. We're looking at our swing failures, right? So liquidity grabs. And that's basically when we have a level, price moves into that level. Something like this. If this was our level, price moves into the level, setting a high. Price then comes above, gets everybody bullish, only to come back down, retest the low that took the high, and reverse. All right. So they're the kind of patterns that we're looking for. Yeah. So price to come up and set a high, that high to get run, takes the liquidity, gets people long here. Then price comes down, takes out these stop losses down here, generates liquidity, comes back to this region, and we're either looking for a retest of this line or we're looking for a fair value gap in the impulse move that punched through and broke structure. All right. So we're going to look at some of those on the lower time frames and show you what I mean. But basically, back to the point of levels. Well, on here, we've got our range high and our range low. our 50 line, and look how well respected that has been, right? Price came down, we set the high, set the low, deviated above this 50 line, came into our hour 2 order block, yeah? Came into that, literally just tagged it and then caused this reversal. What happened? We then had this big impulsive move. We've come down, taken out the 50 line now, come and retested it. So a logical target based on that, based on that premise and our range playing premise, which is we're looking for a level to be interacted with. If we get the deviation, we get a close below, and especially like this, we get this retest, then the logical target then becomes the range low, right? In the same vein, if we're going to run down here, right, we do something like this. That becomes our target 1. Our entries would be here, right? So price comes down, runs the low, takes liquidity below, closes above the high that sweeps the low, yeah? And then we'd look to put limits order on here, yeah? Or you can market enter, or you can, not. This isn't financial advice, little caveat for you there. This is just how I look at the markets. And then when we get up here, you want to see price consolidate a little bit, right? And then when it gets into bullish structure again, that's when you get your opportunity to either compound, as in to add to the trade, or what I do very often, I'm cutting large sums, a large percentage, of the original trade here at target 1 in case we get that aggressive reversal. And then I'm happy to get back in up here. Right, I don't, you don't need to hero these trades and kind of hold the thing all the way from down here all the way to up there, only to get to here, find out that you're running into a higher time frame order block, right? Price reverses before you hit your target, then you're trying to market close as the market's having an aggressive sell-off, and that way, unfortunately, is how you lose a lot in slippage. All right, so I hope that makes sense. So that's what I'm looking at the moment. I'm still looking for these lows to be taken out down here. I still think that's the most obvious target. What an absolutely terrible circle that was. But I'm looking for these lows to get taken out down here. So when we've got our targets, then we've got an area that we can look at for price and say, okay, this is going to be our action point. Chase Showman, how's it going, buddy? How's things in South Africa? I bet you weather's a lot nicer than it is here in London. Good to see you on the stream again, mate. So this is where we are. I'm not going to trade this unless we go post FOMC, right? That could be the catalyst to run this down to get that aggressive drop, but it's just too unpredictable for me, right? So I'm happy to wait that out. But that would be my trade plan at the moment, and we've got really, really clear targets. Here's our target if we want to take entries long, and we don't just want to blindly put a limit order on there, right? Like I said, we wait for price to come into that level, and then we can look at how we get that momentum change when we're down there. And then we're looking for bullish structure to be built on the lower time frames, right? Now, always remembering that price is fractal, right? So we see these patterns repeat across different time frames. So when we're on here and we're looking for something on a daily, or we're looking for something on an hourly, and then a 1 minute chart, you'll see these fractal patterns repeating, all right? And that's why when we build our systems out, we want to understand them, understand our trigger mechanisms, and then from there, it gives us the perfect opportunity to stick to our strategy, and we don't feel that need to kind of FOMO in. So one other thing I just wanted to talk about today that I've been covering with a lot of people recently is market structure, right? So I like using the hourly chart for market structure, just giving kind of an overall bias. And if we look at it, even just, drawing your simple support resistance lines, yeah, or your, if you're going to draw your diagonals, really, really important with these, right, to be accurate. So, and what I mean by that is if you're just allowing for the wicks, yeah, then absolutely fine. But just make sure that you've got consistency with that, right? So if I was allowing for the wicks on this, right, and this was my first line, and my rules are that I need to anchor this to the first wick, and then I'm looking for the next available wick, then this is my line. Looks really ugly, doesn't it? But actually, it probably tells a lot of truths. Yeah, so prices come up into here, we get these wicks, deviation, retest, sell off, take the liquidity below here. What happens here? We clear out these highs here, right? Deviate again, come back down, try and get out of the range, then we have a larger sell off. And it actually catches the breakout level down here. So drawing these kind of levels is subjective, right? Because you'll see some people will respect the wicks, other people will go for the line of best fit. And another method really that a lot of people employ is that you can anchor it, a wick, wherever, but the rule is that you're not violating the bodies of the candles, right? For the information that you've got. So let's say, for example, information that we've got ends here, and this is our line, yeah? And as we're drawing that line down, then we get these violations here. But that's fine because we want to see them, because we want to see the deviations, right? We see the deviations. When we close back below, we then get a high probability setup that we're going to move a little bit lower, all right? And what it also allows us to do is kind of look into this and say to ourselves, okay, are we coming back into any key order blocks? Have we got any fair value gaps, bits and pieces like that? And then just looking at it, just not really planned this, to be honest, but just to kind of give it some context. That's when you can start piecing these kind of things together, right? So we deviate, come back down, we get this impulsive move lower, which leaves this fair value gap, all right, or inefficiency. The market moves up to rebalance this before it continues with the trend, all right? So before I digress too much, just saying that if we're looking at market structure, we want to really, really make sure that we're just sticking to our parameters, meaning that if you're going to use levels like that, be consistent with them. Otherwise, it will just kind of mess with your trading, all right? The other thing is when we've got context, yeah? So this here is a 4-hour, zoom in a little bit actually for you guys, 4-hour order block, okay? So we go to the 4-hour chart, we've got this order block here. All right, so again, we've got an idea down here. We're saying to ourselves, okay, so we've got this fair value gap, right, that's been created here. Price comes up into here and starts to break down, right? So we have our shift in market structure here, and it sells off. So what we're saying to ourselves is, where's the likeliest target on the downside? Where's price going to come to try and find that fuel we're talking about to fuel that move higher or to lose that move and continuation lower? So when price comes into this level here, we've got our order block, yeah? We also know that we've got this inefficiency below that's probably drawing price down. So we'll either get this reaction here, yeah, comes into the order block, takes liquidity, enough to fuel the move higher, or if we lose this level and we show weakness, then we've got other key targets here, right? The inefficiency to fill, and then we've also got these lows, right? The reason that we target lows and highs is because it's where the liquidity sits, right? So when institutions, smart money as ICT calls it, look to buy, they have huge orders to fill, right? So they need to fill those orders at the right price. And it sounds really, really simple. They want to sell high and buy low, right? So if price really takes off all of a sudden, you're risking a lot of slippage. You might not get the orders filled at that. So price gets pushed down to a level, right? Now, under this level, what have we got? We've got stop losses, right? For people that are long. Now, a stop loss for a long order is a sell order, yeah? So it sounds really counterintuitive, right? But that's what you need, because if people want to buy, they need to match their buy orders with sell orders. And if there's a big wedge of sell orders sat under here, yeah, then smart money can dip into that, buy all of those sell orders, yeah, and use it to fuel moves higher, all right? So that's our premise of why price is on this constant search for liquidity. Oh, Wax Shah, TA is great, very informative. From sunny Singapore, awesome, man. I've been through that wonderful place a few times, but I've never really spent that much time there. I'm absolutely determined to go there for a really, really good spell. Probably going to do some traveling around Asia in a year or two's time. Got some exciting stuff coming up, so going to be busy. But yeah, love the idea over there. Good friend of mine, another trader, lived out there for a number of years and just absolutely loved it. Driftless Crypto, what a wonderful and kind thing to say. Thank you very much. Feeling the love today, guys. Really am. So, obviously digressing as I normally do. Market structure, right? Look, higher highs, higher lows, yeah, on the hourly. When we break structure, yeah, like we do here, right, then what we're saying to ourselves, okay, is where's our target? We've targeted this because we've got an order block here, yeah, on the 4-hour, and we've also got liquidity under these lows. So we don't just want to blindly put limit orders there because we don't know how price is going to react. But if we're just looking here and we're saying to ourselves, okay, well, what do we want to take out? Well, we want to clean out these highs here, yeah, so we get our break of market structure. So let's pop that on there. Label that up our MSB for market structure break. Yeah. Then look at this. Look how price moves through levels as well, guys, right? You want to see a really powerful move. Price is getting ready to move. You want to see this punch through it, right? So you get this punch through this aggressive move. Now, we've got an hourly break of structure. If we're going to drop down onto the lower time frames to execute here, right, I like dropping down to a 15-minute chart. All right, and let's draw this across a little bit neater. So this is where we get our shift, yeah, market structure break. We get this impulsive move up, yeah, which we can see here. Now, what these moves are designed to do in a lot of ways is get people to FOMO in, right? So that's where you need to be really careful. Quite often, you get this mitigation of these moves, right, where price comes back to rebalance, all right? So here we have our break. We have this impulse move up, close of this candle here. We're then looking back and saying to ourselves, okay, what potential points do we have here where price could come back and rebalance? Yeah? So in terms of rebalancing, we want to look for a couple of things. We want to look for our fair value gaps, of which we have one here, and the one that triggered price higher. All right, we can see price comes into this here, then we get this impulsive reaction and price moves up. The other thing that we can do with plays like this, and it typically works a little bit better on the lower time frames than this, but we want to see, to show us that the momentum's ready to shift, we want to see a sweep, right? So we want to see the lows taken, which we get here. So we've got this key low, price is driven into this low, yeah? Again, to generate liquidity. We then get this powerful move to the upside, right? What we're interested in here is we want to find the high that takes the low, right? Here. Now, I call that, and it's just some name that I've made up myself. You can call it absolutely anything you like, a breakout line thing. I call it a breaker line. But what we're looking for here, we're looking for the high that sweeps the low, price to come above that high, and then we just simply put our limit orders on this line, yeah? And then that way we're saying to ourselves, right, price comes back in and tags this level and it moves away. Now, I do like using fair value gaps. I find that price quite often when you get these impulse moves, you do leave inefficiencies and the market very, very often comes back to rebalance those. So that's what I'd be looking for in that respect. Now, all of this is down to the market structure, right? As we've reviewed this, we can see the market's breaking down. We've got a key level that the market's coming into. We look for our market structure shift, yeah, or market structure break. On the higher time frames, like I typically try to use an hourly, or I am happy to use a 15-minute like this, in which case we'd be looking for our break here, yeah, which we get, then the impulse move up, and we come back basically to the same levels. So that's just a little bit of insight in what I'm looking for there. As I said, we're not looking to trade FOMC today. I know some people will, and absolutely the very best of luck to them. There's some people out there that trade news events incredibly well, but it's just not how I work. So let's take a very quick look at ETH as well. So what's going on with ETH? Let's go to our daily. When TradingView catches up to us, I don't know if it's my internet or if TradingView just being a little bit tweaky this morning. Hey, here we go. Or maybe it's just because of all the stuff I've got drawn on the chart. So, for context, we're going to zoom out to our daily. I'm going to change that over because it is a new month now. So, here we see our levels, right? We've got our fair value gap in here, which is a weekly fair value gap, all right, between these two lines. So again, we were looking for price to come into our key levels here, right? So we've got down here another fair value gap, which was drawing price down lower. We lead this sell side liquidity along here. That gets run, price comes up, breaks structure, and then it moves higher. What are we targeting? Well, we're looking for the fair value gap, right? That's what we're saying. That's our premise. Our thought process is that price is going to get drawn up towards the fair value gap. So now we're in here and we've rebalanced that, yeah? Now we're coming up to here. This is kind of what we were thinking of in respects of, let's just pop that on here. Put this box on just to make that a bit clearer for you guys, because otherwise it's just lines without too much context, isn't it? There we go. So there's our daily fair value gap. What happened? Price gets launched up into that. This was the real makeup of why I've been short, right, this week, because we've come up into this. You want to see kind of this be filled ideally, but when it comes up and it has that key rejection like that, the close of that wick. Now, again, obviously it was a weekend, so you have to wait for Monday to start, in my opinion, and watch that develop. But that's why we were short on here. Once again, if we just drop this down to an hourly, I'll show you my thought process behind this. So we've come in up here. We've come into this area, our POI, our point of interest, right? So like a target. And we're saying to ourselves, we don't want to necessarily hold a bias as we go into that, because we don't want that to mislead us, right? As human creatures, we're very fickle. You know, if we don't want to think that we're wrong, right? So we can do all kinds of magnificent things mentally to convince ourselves otherwise, which can be really dangerous. So what we want to do is wait to get to a level and then wait for price to give us an indication of what it wants to do or where it wants to go. All right. So when we came into this level here, once again, just on an hourly, come and set this higher, right? Remember what I said. If we're looking for a reversal, you want to see these liquidity sweeps. So you want to see a higher taken, right? Which is this. Now, we want to see a close below the low that took the high. So this is the origin of the move. And I mean, this one is a beautiful example. I have to remember where this is on the charts for the future, because this is really what you want to see in respects of this. In respects of this move, you see price come up, sweeps a higher, comes down, closes below the low. Yeah, so this is the close candle. And again, remember what I said about how price moves through a level or into a level. We see that impulsive move, yeah? You see that punch through the level, right? It moves with aggression, moves with volume. It's telling us that the market is potentially ready to go lower. And then again, what we get here is our fair value gap, right? So put that in blue just so that stands out a little bit more for you on the lower time frames. So we've got our market structure shift. We've gone from bullish to bearish. We've broken down below here. Actually, here was the original close, right? But again, we didn't really punch through the level, did we? We kind of dipped our toe and then backed off away from it. So then when we did this, we have this big impulsive move down. Then we get our fair value gap. We can either place a limit order on the breaker line here and tag that in. And then where have we got targets for? Well, we're looking for these lows, right? So if there's liquidity sat below here, think about this in terms of stop losses. Yeah, there's a couple of things here that we can target. We've got our relative equal lows. Yeah. And then we've also got this fair value gap. So when we're looking at this and we're saying, okay, price has broken down here. Now when we get that break below, if we're entering here, now when we're trading the fair value gap, you can place your stops above the first of the three candles, yeah? Or if you want to be more conservative, then you pick the swing higher, right? So we did that. We just want to make sure that if we're tagged in here, we've got at least a 1-to-1 for this. We don't need to catch epic moves all the time, right? We just need to catch decent moves with consistency. And then we get that and we can see we get the reaction here, sells off, drops lower, comes into this fair value gap, right? But we don't run the lows here. Now, this is a sneaky, sneaky move, and this is what the market loves to do. The market loves to find people that get into moves late, right? So if you were entering here, or even worse, you're entering down here, the chances are that your stop losses are in and around either these highs here, yeah, maybe this high here, so, or even this one when you look at it. Now, look what the market does to people that want to enter late. Yeah, people are in here. Theory's correct that price is moving lower, but it comes into this level here, doesn't reach a clean target under these lows. So most people are probably still in these trades. We get this little reaction here, and then you get this huge impulsive move up. Yeah, this manipulation of a move, basically, where the price is going down, it then rockets up here to take out all these stop losses, generate all that liquidity, and then look at the sell-off that we get. So the other thing that's of interest here in terms of how price moves, rebalances, is where did this come to, right? Where did this come into? This inefficiency here, right? So again, markets moved away, rebalanced, moved away, rebalanced here. Then it's had this giant move to the upside to generate liquidity, take out all of this, a manipulative move that comes to rebalance here. And then it sells off so quickly down to the key target, which was the liquidity resting below these lows, that people just don't have time to get into this move. Or if they do, they're into it too late and they're in here, right? So then when we're down here and we have this bullish reaction, we've cleaned out these lows and we say to ourselves, okay, in terms of our bias, are we going back up? We see this market structure shift here, yeah? And then again, we're looking for any inefficiencies that we might want to come up and fill. And we can see here that we did it perfectly. Market's rebalanced here, right? And then it's come into this order block and then it's sold off. All right. So that's what I'm looking for in the market, how the markets move. All right. I'm looking for inefficiencies, key targets on high time frames, and then I want to get levels of interest. And then I'm looking to take my trades amongst there. The other thing that I've got on here as well is we've got this up candle before price sells off. This is our order block, right? So we take this from the body of the candle. If we had a fair value gap after it, we would include the wicks, but we don't. And then very, very simple diagonals here. Right? So again, we can see price comes down, respecting this all the way. Hits into this, we get rejected, right? Then what happens? We have this big sell-off, break this structure to the downside, leave our fair value gap, our inefficiency here, which is between this candle and this candle here, come back up into it here, almost perfectly to the equilibrium, right? Which is the 50%, and now we're selling off. So we've not only broken out of this, right? We've taken that, we've rebalanced, and now we're saying, okay, where's our downside targets? So if these are our equal lows here, we can see that we've come into them again. So we dipped into it here, dipped into it here. What would I be looking for here? One of two things, right? So again, you want to see this kind of pattern for a reversal, in which case that's where you're looking for your entries. Or if price does come down into here, then we'd be looking for continuation, something like that, right? And then where would we target? Always look left, guys. So left, draw one of my rubbish arrows for you. And what have we got here? Right, we've got this fast move down here. And we can see that market was stopped here for some reason. So that's got to hold some weight to it as well. So we look back for where that is. And we say to ourselves, we lose that level there. Then we find the order block that's in here, right, that supported price up, and that's where we would target. So we would take short scalps down into that. If we have this, however, then we've got a ready-made target here in that fair value gap. So again, lower time frames, we get down onto the chart, wait for that shift, then price will pump up into this, which would be our main target. And then from there, what we would look to do is look for price hunting the liquidity above these targets. But again, just want to be aware of our order blocks. So here we've got target 1, target 2. All right, guys. Look, I hope that's been helpful, not too convoluted. I wanted to keep this one just a little bit shorter. I know I do rattle on these things. Hopefully it's of use to you guys. I'm always keen to get your feedback, guys, how I can make these streams better, more informative, if there's other things you'd like to see. So throw in a bit of ETH in there now, as I know a lot of people want to cover ETH. Just a quick question here from Jay Showman. How do you handle up and impulse down? Do you wait for a second attempt before entering a short? So a move up and then an impulse move down. So basically something like this. Yeah. So when we get that move up and then we get the big drop. Yeah. Or even something like this, for example. What I would be looking for, I'd be looking for that fair value gap, because I would want to know if price is going to come and rebalance at that moment or if the momentum is still very much to the downside. All right. The other thing as well that's worth noting is how price moves, right? Whenever you see these inefficiencies, chances are price is going to come back to fill those, right? So when price moves away here, and say it doesn't give us an opportunity to get in, right, which it doesn't. Very often, by the way, just something that I would say is when you look at these kind of moves, this is your breaker, or some people call it the first obstacle, bits and pieces like that. But quite often what you'll find is you don't want these to be violated, right? So price can kind of come down, it can wick below, but you want these to be held. And then they very often, as you can see here, act as a platform for price to have continuation. Yeah. And then it's the same with the down moves. All right. So when you get your moves lower, right? So let's say this, for example, then this block here, you wouldn't want to see that violated to the upside. So this is obviously the up candle here. Well, you notice his price breaks down from that, comes back in, and then we have that bigger move down. All right. So in terms of an impulse move, they're very, very often things like this. They can often be to take out liquidity or a sign that the market is ready to move. If you get that, if you do market enter, the chances are as price is going up aggressively, then you're going to get a lot of slippage, all right, which is really, really going to mess with your entries and your fees and your overall profit, all right? So for me, I always prefer to wait for price to come back, right? And, it doesn't always happen immediately after the move either. If we take just this one just very quickly as an example, right, just becomes a point of interest for us, right? So here we've got this level, we've got this order block level that we're interested in. We've got this inefficiency here. Price is being drawn down towards it, yeah? Then on the lower time frames, we can go on there and say to ourselves, right, let's wait for a market structure shift. We know where we're wrong. We can get stops in really, really tight under here. And then we've got ready-made target up here in this order block, right? Or these levels here above with the liquidity, all right? So I hope that answers your question, buddy. If not, do ping me a message and I will get on it for you next week. All right. So look, guys, really, really always is a pleasure to be live for you. Really appreciate all the comments, the feedback and everything, and you all giving up your time. I hope it's been valuable for you. I am going to be live again next week. I'm not going to be live on Monday, but I am going to be here Wednesday and we'll do some kind of catch up as well. Got a few interesting short videos coming up for you as well and some really exciting news coming out of the nest to share with you all as well. So do keep an eye if you're interested in following me on Twitter. It's, as my name is on here, it's BC_Richfield, and do come along. There's details for the Nest, our trading community. You can sign up for free. It's a really, really brilliant community, very heavily focused on education. And you can get a free trial. Come along, see if it's for you. All right. And if not, I look forward to seeing you guys next week and hopefully catch a lot of you around the Nest. Have a fantastic week. Great to see you all. Take care.